Good afternoon, good evening, good morning, whatever time you are seeing this. My name is Chris Elliott of the Elliott team at Remax Action Real Estate. I'm a local Richmond realtor, giving you your housing market update for this week. I'm recording this Monday, April the 27th, 2020 at 1:45 p.m. So this information, to the best of our knowledge, is good and accurate up until this point in time. I'm going to attempt to do this in 10 minutes or less at the request of some of our clients. Have had to shorten this down, so I'm going to talk very quickly. But hopefully, if you're seeing this via email or social or YouTube or somewhere, if I skip past anything, you can replay it. Towards the end, we're going to be sharing the information that we're seeing here locally, so make sure to stay for that. And if there's anything that I don't address, by all means, call, text, email me, send me a smoke signal, carrier pigeon, whatever. All right, let's jump right into it. Okay, so a little bit of news from last week, kind of a buzzword or buzz phrase. Reuters put out a poll of 45 economists that said 22 of them, or half of them, said that this is going to be a U-shaped financial recovery as opposed to a V-shaped, which is what we've been talking about over the last few weeks. So it's created a little bit of controversy of, is it going to be a V-shape? Is it going to be a U-shape? Some folks are even saying it's going to be a check mark shaped. Some people are even saying it's going to be a W shaped. So a little bit of controversy there. We shared this graphic before, and this is current as of the 15th of April. I am not sure if they've updated this, but Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, four of the largest financial institutions, all said as of 4/15 that this was going to be a V-shaped recovery. Once again, said this before, these are financial institutions that have a lot of resources at their disposal. They are managing trillions of dollars for some of the wealthiest, individuals and families, not only in the United States, but all over the world. So they've got a lot riding on making sure that they get this thing right. So at least three of them say that we're going to see positive growth as of Q3 of this year. Wells Fargo says it's going to be Q4 before we start seeing positive growth. But it at least seems that these financial institutions are saying it's going to be a V-shaped. Would be very curious what you think, if it's going to be a U-shape or a V-shape. Definitely comment below, or if you're getting this via email, reply back. Would be curious to know kind of what your thoughts are. The good news is that no one is saying that it's going to be an L-shaped recovery, which is what we saw in 2008, where the economy fell off pretty drastically, and then we kind of rode, skidded along the bottom for a little while. So nobody is saying that is going to be the case. So whether it's a U-shape or a V-shaped, both of those are better scenarios than an L-shape. So that's my 2 cents there. What are the experts saying? Ivy Zelman, who is a very respected economist in the residential real estate space, is basically saying that, and I won't read the quote to you, that the rate of appreciation that we expected to be seeing in 2020, that is going to decelerate, but that we're not going to be seeing depreciation. So basically, home values are not going to be going up as much as we originally thought they were, but they're not going to go down. Which is very good news for anybody that owns a home, anybody that's looking to sell a home. Mark Fleming, the chief economist for First American. First American is a huge company in the real estate space. They are a national home warranty provider, title insurance provider. They do some other things, so big company. And Mark basically echoed Ivy Zelman, which is when he said house price growth is likely to slow, but is unlikely to go negative. So once again, good news for anybody that owns a home. Freddie Mac, the only negative one of the bunch, basically said that they are forecasting that we might see a fall of 0.5 percentage points. So basically 1/2 of 1 percentage point in depreciation over the next 4 quarters. To put that in perspective, if you live in Richmond, Virginia, our median home price is $300,000. So if you owned a $300,000 home, that means your home value would go down $1,500 over the next 12 months. If you don't plan to move, it's not really a big deal because it's all just numbers. But if you were somebody that was looking to sell, that could potentially harm you up to $1,500. But even they said at the end there that price growth accelerates back towards a long run trend of 2 to 3% per year. So even Freddie Mac, who's saying that we're going to see a little bit of depreciation in the next 4 quarters, is saying that it's going to be heading in the right direction thereafter. So good news. So, all right, let's go down to the meat. This is the graph. So we've been tracking week by week the numbers for our Central Virginia MLS market. So week by week, we've been tracking this thing since March the 5th, and that's what we're depicting in these graphs here. As you can see, pending homes, which in my opinion is the greatest indicator of the health of our real estate market, how many homes are actually going under contract, how many homes are selling. As you can see, pending homes has gone up over the last two weeks. So the 1, 2, 3, 4, 5 weeks preceding that, it went down kind of in stair-step progression over that 5-week period, basically from the start of March to the middle of April. And in the last 2 weeks, we've seen the number of transactions go up. So we're trending in the right direction now. Interesting enough, and we pointed out this last week, but if you look at the number of homes that are being activated, the number of homes that are coming onto the market, that dropped off significantly last 2 weeks and is still not recovered to the levels we saw the 2 weeks prior. So we talked about this last week. We're seeing it again this week. It kind of creates an interesting opportunity for anybody that's hitting the market, because as you can see, the number of homes that are actually selling is going up, but the number of homes that are actually becoming available for sale is down significantly. So anybody that is hitting the market is seeing very good activity, and homes are selling at good prices. I had personally had a listing that hit the market this past Thursday. Chesterfield, $200,000 property, so on the low end for the greater area price points. But we had that home under contract in 3 days with multiple offers. Hit the market Saturday morning hit the market Thursday morning. By Saturday evening, we had 29 showings on the property, which is kind of crazy to fathom. And we had multiple offers, and we were under contract by Saturday night. So we're seeing a lot of activity on the market. Also interesting to know is if you look at the number of pendings, while they did decrease since March the 5th, at no point did the homes that were the levels of the homes that were actually going under contract dip below the amount of homes that were hitting the market. So we're still selling more homes on a monthly basis or on a weekly basis than are homes that are hitting the market. So very good news for anybody that is selling a home, knowing that, once again, this kind of supports what we're seeing on a national level, that we're not really seeing prices drop because more homes are selling than homes that are available. So hope that makes sense. I'm kind of flying through this just to get it under 10 minutes. All right, last thing I want to show you. Thought this was very interesting. Showing Time. Showing Time is a service that helps real estate agents book and coordinate showings. So basically, in today's day and age, if an agent wants to show a property, they go onto Showing Time. They say, hey, I want to show Chris's listing, Friday at 3 o'clock, or whatever the time of day is, and Showing Time will confirm that showing. Showing Time is used all across the United States. They're in most of your major metro markets, so they have a lot of data at their hands. And they've been putting out reports as far as the number of showings that we've been seeing since the beginning of year compared to 2019. 2019 is the blue line, 2020 is the orange line. So as you can see, around March the 10th, we started to see a decline in the amount of showings. As COVID became more and more serious, while homes were still selling, the amount of showings was going down, kind of gradually up until about April the 5th or 6th. That started trending back upwards. So we're starting to see the amount of showings, the amount of buyers out there looking, and the amount of properties that they're looking at start to trend back upward, which is very, very good news. It's an indication to me that we're starting to head back in the right direction. We're starting to head back to what we would see in most normal markets. I think a lot of that is just the panic is kind of over. While there's still concerns, that initial shock is over, and I think folks have kind of settled into, hey, this is the new normal of what we're seeing. So that's what we're seeing on the front lines. If there's anything we didn't cover that you thought we should have, if you have any questions, concerns, comment below, shoot me a direct message, shoot me a reply email, call or text me at that phone number right here. We kept our promise. We kept this under 10 minutes. Hope this was informative. And if you need anything, reach out. Hope you have a great rest of your day, and we'll see you next week.